And there you have it, the closing bell at the New York Stock Exchange, signaling the end of the trading day. It was a bounce-back day on Wall Street. The Dow Jones ended the day up over 500 points.
The S&P 500 and NASDAQ also had strong days. The S&P up about 1.5% there. The tech-heavy NASDAQ up nearly 2%. Joining us now is Jeffrey Kleintop. He is a chief global investment strategist for the Charles Schwab Corporation. Thank you very much for joining us.
Thanks for having me. Great to be with you.
So, Jeffrey, what was driving the market today?
I think there are four things that drove the market today. For one thing, tax day selling is done. Don't underestimate the impact that can have on the attitudes towards selling and buying. I'd also note that we saw an increasing number of companies now reporting earnings. That means they're clear to start doing their share repurchases. So again, the shift from selling to buying taking place today. And what we really saw was a spring in the market right out of the gate this morning, right after that housing data, which was stronger than expected, showing maybe that the rising rates impact on housing isn't as bad as feared. And I just had one more thing. Earnings reports continue to be better than expected and maybe a little bit more optimistic than some of the economists' take on the economic picture lately.
That's interesting. All right. So, Jeffrey, we also saw that several airlines and Uber performed well today after that Florida judge voided the federal mask mandate on public transportation on Monday. Do you think that this positive trend for travel stocks could last, or is it too soon to say, considering the fact that health officials are warning that another wave of the virus could be coming?
I think waving somewhat of an all-clear flag for travel is a potentially good sign, but we have to remember that fuel costs are really gone up, and that's going to be pushing up ticket prices, and that can act as a disincentive. So I think a lot of it will depend on the picture with inflation and energy costs. They've been receding a little bit in the commodity markets lately, but jet fuel prices are still high, and that's going to get passed on to those consumers. So it's a bit of a balance of factors. So I'd be a little bit cautious in embracing airlines today.
And Jeffrey, the International Monetary Fund said today the global economic recovery will, quote, slow significantly this year because of the Russian invasion of Ukraine. So how could that statement alone impact U.S. investors?
Well, I think you have to take a look at the numbers. They did downwardly revise their expectations for global growth, but they brought it down to 3.6%, and that's still above the 50-year average of 3.0%. So while they did downgrade it, we're still looking at above average global economic growth, though not in that range of 5 to 6% that had been pushing up inflation. So maybe this is a bit of a Goldilocks number from the IMF, and the economic growth rate is still average. It's not weak enough to really prompt dramatic fears of recession, but it may be just enough to ease up some of the inflation pressures in the second half of the year.
So, Jeffrey, it sounds to me like what you're saying is that there may be some worrisome factors on the margins, but overall you think the economy is strong and heading in the right direction?
Well, I think there are some risks as we look out longer term, particularly if the Fed remains on its path to hiking interest rates. But I think in the near term, we're not seeing any signs of slowing economic demand or any signs of a slowdown in earnings. Those are two of the most important drivers of the stock market.
All right. Well, Jeffrey Kleintop, Chief Global Investment Strategist for the Charles Schwab Corporation. Thanks for joining us. We appreciate your insight.
Thanks for having me. Great to be with you.